It's time for Talk Law Radio with Todd Marquardt. Todd Marquardt, attorney at law in Texas. If you're a millionaire or a thousandaire, Talk Law Radio is now on the air. Call in with your business law question, your elder law question, veteran aid, Medicaid, build a business to get paid. 210-308-8867. Or ask a question online at marquardtlawfirm.com. That's MARQUARDT lawfirm.com. And now it's Talk Law Radio with Todd Marquardt.
Welcome to Talk Law Radio. I'm Todd Marquardt on the radio, on Facebook Live, on YouTube, and on talklawradio.com. Today we're going to be talking about trusts and the trust department at a bank and what kind of trustee should you have? Should you have an individual trustee or a corporate fiduciary trustee? We have Stephen Countryman here today from Frost Bank. Welcome to the show.
Hi, Todd. Thanks for having me.
So before we start talking about the law, I like to begin with a prayer. Dear God, thank you for this day. Thank you for all the gifts and blessings that you give to us. Please forgive us for our sins, for our mistakes, for doing the wrong thing or failing to follow your will. Please help Stephen and I talk about what it's like to have a bank trustee today. Help us give good information to the listeners. Help us to do everything we do for the good of your people, for our own good, and for your glory. In Jesus' name, amen.
Amen.
Now it's time to discover your legal issue blind spots by listening to me talk about the law on the radio. Welcome to the show.
Thanks. Excited to be here.
Yeah. So tell us a little bit about yourself, your background, your education, your experience.
Okay. Well, I'm from San Antonio. I went to Clark High School, grew up in the north side, and went to Texas A&M University. And I spent a summer clearing trails for the Forestry Service, which led me into a path of becoming like a EMT and then eventually a paramedic because I thought I was going to be a wildland firefighter.
Oh, okay.
And that's how I got my first real job right out of college, which was being a paramedic in Austin, which was not, very few fires involved. It was really just I needed a job. And so I took this blue-collar job. I had a degree from A&M, International Studies.
I was just going to ask, what did you get your degree in?
International Environmental Studies at Texas A&M, which was amazing. I got to study abroad in Ecuador. I don't think my parents would have paid for it otherwise. And I really enjoyed the EMT element that I'd gotten my EMT while I was my senior year at A&M through a program that was adjacent to A&M. And I was trying to get a job with the Forestry Service to fight fire, but they weren't hiring before I graduated. So I just said, well, I guess I'll finish up and get my paramedic, which is a lot more intense. So I got my paramedic, and then I just needed a job. And so I looked to see who was hiring, and fortunately, Austin Travis County EMS was. So I did that for 4 years, and I got pretty burnt out. It's a very intense job. And so I thought, well, I better use my degree. And I was engaged to a woman who I'm now married to for over 9 years who was in dental school, and I figured I better do something to impress her.
Yeah.
So I went to law school, and I come from a long line of lawyers, and I really couldn't think of anything better to do. And so here I am.
But it wasn't forced upon you.
No, not forced upon me. And law school, most people will tell you, is extremely difficult. It's competitive. You don't make a lot of friends. Sometimes you do, but I didn't. It's just, it's the way it's structured.
You have to compete.
Exactly. And so it was tough, but I came home. I went to U of H for law school, University of Houston Law Center, and I was there for Harvey, and I did not want to be there any longer than that because everything flooded. We lost our cars, all this. So,
oh, wow.
My wife, who it was in dental school, then in residency as a periodontist, I brought her back home, and she came willingly, thankfully. And we've planted some roots here in San Antonio. And I practiced law for a year with my brother at his firm, Lane & Countryman. And I was not loving the billable hour life. Yeah. And I'd worked for the probate court in Harris County. That was my job. Internship is a 3L. And I really enjoyed it. And so I started looking around for jobs that were in that area. And I'd had a staff attorney that I'd worked with in Court 3 who went to work as a trust officer. So that's what I was looking for, and I found an opening at Frost Bank. And, Frost is an institution here.
Yeah.
Everybody kind of knew when I talked to them about it, that's going to be a good job. And sure enough, it has been. And Frost has been very supportive of me. And I have kind of been just going up the ranks, doing jobs I really wanted to do. And they've had a lot of support and trust in me. And I've been very grateful for that. I actually did estate administration. After about 6 months, they put me in charge of estates, which was it is currently the best job at the bank. And I kind of regret not doing it anymore.
Yeah.
But it's a lot of fun. That was the job where everybody who names Frost as executor in our region, that's your account now. So I was in there going through people's stuff and learning about them. I learned so much about antiques and coins and memorabilia, and then I had to learn about various investments and how to deal with family drama. So in other words, I went from first responder as a paramedic to last responder as an estate administrator.
Right.
And about a year ago, they put me in charge of business development when that job opened up. And so now I do onboarding and help answer questions. And, I meet with private bankers and their customers and try to kind of lay the groundwork for their estate planning goals so they can go talk to an attorney. Of course, I don't practice law. I don't carry insurance. But we have a list of referrals and people that we generally send folks to. And and we try to help, and most people tend to have lawyers when they come in. So we help bridge that gap. And I think we offer a pretty good service because a lot of times we save money. There's not a lot of back and forth. And if they're naming Frost in some capacity, we can tell them, well, here's what we normally do. Here's our expectation. Some larger corporate fiduciaries have required boilerplate language,
Right.
And those companies shall remain nameless. But Frost is pretty easy. Generally speaking, the private wealth institutions that are local are pretty good here in San Antonio. And we don't get too picky about language. I mean, you want to be able to take your fee, obviously.
Right.
And, releasing liability or release of liability from prior acts of other trustees, that sort of thing. That's important language. But after that, we're pretty malleable, and we have a really great trust committee of administrators at Frost that are mostly lawyers, and they all have advanced degrees of some sort, or they've been doing it for over 20 or 30 years. And that's who we lean on, is that fountain of wealth, and fortunately of knowledgeable wealth that we have at Frost, which has been a boon for me because I've learned so much doing this.
Yeah, there's a lot to learn. It's a big area of law.
It is. And, Frost has been around since 1868, and we have had our trust charter since 1919. And that means we survived through the Great Depression, savings and loan crisis, 2008. A lot of banks did not. A lot of San Antonio and Texas banks did not. And, in fact, my grandfather, I found in his old I inherited all his firearms. I was the only grandchild that liked to hunt, and I inherited his firearms.
Oh, I wish I had known that. One of my favorite songs by Roger Krager is "I Got the Guns."
Well, there's the one about there's also my first gun was a 243. You know that?
Yeah, I do.
That's my first rifle as well, Seiko 243.
Okay.
But anyway, so I was going through his bags, and I found a checkbook from an account that was open. I looked it up back in 1947 when he got back from the war.
Wow.
So anyway, so my family's had a long history with Frost Bank as well. So it's been a lot of fun working there, and the history of it. I'm a huge history buff, and just seeing how we survived through all this has been really interesting. And
and that's important in an institution, in a financial institution, to survive those things. It gives people a lot of comfort and peace of mind.
That's exactly right. I think we were talking before the show about how important Frost's goodwill is, and our reputation is everything. We've really developed some extremely goodwill in this city and across the state, and I think we've earned it the hard way through having to, we don't cut corners.
Doing good work.
Yeah, and doing good work, exactly. We don't. It's not just all about marketing and putting our brand everywhere. It's about doing good things and having people say good things about you in the community. So it's a fun place to work, and that's reflected, I think, in the work product.
Yeah, good culture. Well, we're going to have to take a break. When we come back, we'll be talking about the hidden legal issue blind spots that people need to know about when choosing a trustee and what to expect from a trustee and what kind of trusts the bank could manage. So stay tuned. We'll be right back.
New to San Antonio? If you move from out of state, your estate plan may not be aligned with Texas laws. Did you know 41 states treat property ownership differently than Texas? Protect your assets and loved ones. As a newcomer to Texas, it's essential to review your estate plan with an experienced attorney. Marquardt Law Firm is here to help. Chat with us online at marquardtlawfirm.com to schedule a consultation. That's MARQUARDT lawfirm.com.
Welcome back to Talk Law Radio. I'm Todd Marquardt here with Stephen Countryman from Frost Bank Trust Department. We're talking all about what it's like to be working at the Trust Department today and answer some questions that you might have about whether you should name an individual as a trustee or whether you should name a bank as a trustee, and what kind of trust do they manage, what type of assets do they manage. What are some good circumstances to arrange for a trust? And so I want to talk about people who want to name a family member as trustee. What should they consider when deciding whether their family member is going to be a good trustee or not?
Sophistication level. That's really the heart of it. Can they manage finances? Can they act prudently? Remember, there's a prudent investor rule for the trustee. To invest prudently, they shouldn't just let that money sit in a checking account, and they also shouldn't invest in Bitcoin, or at least all in Bitcoin. So if you're an individual and you're just, you have a normal job and you're not a lawyer or a CPA or even in finance, you're going to have a hard time. And there's notice requirements. There's disclosure requirements for the beneficiaries. And it can be a full-time job as well. So you need to have somebody in there who knows what they're doing. Some of that can be mitigated by, in terms of who's the beneficiary. If they are their own trustee and they have a good lawyer, you can get away with it. Certainly, it happens all the time without needing a corporate fiduciary. But if you're going to have contentious family members, a corporate fiduciary is a great option because they get to be the bad guy and say yes and no to trust distributions and to how the funds should be invested. And if you name a corporate fiduciary, you want one that's got a good legacy and a good foundation, because sometimes you get the newer ones and maybe you can get away with a lower fee at the end of the day, but maybe they're not local and it's going to be hard to get a hold of them. And those reporting requirements that you would see from a local institution, they may be slower to respond on. So, it's okay to have individuals as trustees, especially if it's someone that you trust, or you can even name, your lawyer that helps you with the drafting and everything. But eventually they're going to pass too, and trusts tend to be long-lasting entities, and a lot of times they're supposed to be for generations. And the statute of limitations, or not the statute of limitations, but the
rule against perpetuities.
Yeah, right. That thing that I tried to ignore during law school because it's so difficult to understand. In Texas, is now over 200 years, so longer than we've been in a state. So it's having a backstop, at least of a corporate fiduciary, is a nice way to frame a trust. So if you have individuals that are capable and able, that's wonderful. That's the best case scenario. But if you don't, then a corporate fiduciary is a great option. And then when you are naming a corporate fiduciary, you need to get down into which one and why.
Right.
And it's a lot easier to pick a company that's been around for a long time, has a good pedigree, not in the headlines for doing any kind of nefarious things.
Right.
Those are at the baseline.
Well, if somebody's shopping around for a corporate trustee, they've already decided that they want to don't want to put that burden on their family member. Do you go head to head with other trust departments? Do you talk about what would be good about Frost?
We do. That's my job. So that happens a lot. And I think the savvy, because a lot of times you'll have a group of beneficiaries. Grandpa created a trust and it holds the family ranch, or it holds, just a lot of liquid assets or stocks and bonds. And they're looking for someone to take over, and they don't want it to be each other because they're either adversarial or it has to be a corporate fiduciary per the terms of the document. And the savvy ones will say, well, let's see how low we can get the fee. And, our fee schedule is negotiable to some extent. And I think it really comes down to how much is going to be in there and how complicated the administration is going to be.
Right.
So Frost is not just going to come in and lowball it. We're going to say, well, what are the facts? Who's involved here? How complicated is this? Let us review the document. Are we going to be going to court all the time? Are we going to be dealing with some unique assets here? And if so, then maybe we don't care about being the lowest fee. We want to fee this correctly and still provide what these people are looking for.
Yeah.
But also not undercut ourselves at the same time. So that that's the negotiation process. People want to see performance and they want to see fees, right? Those are the big questions. I think they should also be looking at sophistication level. Can they manage unique assets? Like if there is a family ranch, are they outsourcing that, or are they doing it internally? And I can tell you, Frost is a bank that does it internally. We have our own real estate department full of lawyers and real estate agents and people who've worked in title companies, and same with oil and gas. We have an oil and gas department. We're the third or fourth largest bank when it comes to mineral management under management in our wealth department in the country. So we're 48th something largest bank in the country and third largest in mineral management, and 3 million mineral acres under management, and we have 800,000 plus surface acres under management. And with that management comes lease negotiations, conflict resolution with tenants, paying ad valorem taxes, going out and checking the fence line. I mean, it comes down. We do all of it, and we're going over to the houses and making sure they're in good shape. And then for the oil and gas, it's the same thing. We have some great software that helps us keep up to date with leases and drilling permits, and making sure that the allocations are correct and negotiating lease bonuses, all that stuff. So if you have unique assets like that, Frost is a great place to be. And when we sell real estate, we don't go out and hire a realtor 9 times out of 10. Sometimes we do if it's a really unique property, but most of the time we're selling real property internally. We list it on MLS ourselves. We have real estate agents that do that. But other corporate fiduciaries often will hire a real estate agent who will charge their 3%, and then the bank will charge an additional fee on top of that. So we save our customers some money there on top of everything else. So Frost is a one-stop shop. We like to think that we are. And then the same applies for the family office element, which we don't need to get into. That's kind of a different area. But the idea being you come to us and you say, here's my stuff. I need help.
Yeah.
We can run with it. And that's just from years and years of doing this.
Yeah. Some of the first questions people ask me when I'm talking about a corporate fiduciary is, what does it cost? I tell them, yes, there is a cost, but it's worth the fee because they're going to do a better job with whatever the assets are. People don't realize that when you own the assets yourself, you can decide whether to invest or whether to save or whether to spend. And if you make mistakes, you only have yourself to blame. But when you have somebody else that's managing those things, they have a higher duty of care. And so you have both the duty to make sure that there's not very many mistakes and another duty to try and perform, right?
Yep. That prudent investor rule is always in the back of our mind. And we do a lot of different things. We do trust, of course. And I think maybe we can step back and talk a little bit about how the fee schedules work.
Okay.
When people think about asset management, there's 2 types of, broadly speaking, managed fees or fee types of schedules, for lack of a better word. And you have the managed accounts, which tend to be an annual fee broken down in over 12 months. And that's a percentage. And oftentimes you see the managed fee for a brokerage account around 1%. And The other fee schedule you often see are the trades in a regular brokerage account. So the trades, there's a fee associated with every trade, every buy, every sale transferred. And the wealth department, in most wealth departments, they're all managed fees. It's all based on a percentage. And that percentage goes down with the more assets under management. So that's just a good way to look at it. And our fee schedules kind of run the gambit from, whether you're aiming us to just invest the assets that manage what's called an investment management agency, where we're just doing that. We're your agent. And we're going to do whatever you say. You say jump, we say how high. And then we also, of course, serve as trustee of irrevocable trusts and revocable trusts. And our responsibilities are higher, and so our fees are a little higher. But it's not that much higher. It's about, it starts at 1.3, but it goes down. And if you think about it, that's only 30 basis points higher than a regular managed brokerage account. So it's a pretty dang good deal because you get so much more than just the broker. You get the administrators and the attorneys and the specialty asset people. And then and I don't want to leave off the whole, we serve as executor too. I was told once by my predecessor that we have over 10,000 wills in our will vault, and a 70% market share when it comes to being named is in people's documents. I don't know how true that is still, but we certainly have over 10,000 wills. People trust us, and they name us as a backstop. It's very common. So they'll name their kids, and then if their kids don't survive or aren't able to serve, Frost is the backup. And I think that gives a lot of people peace of mind, is knowing that, well, if they can't do it or they move to Alaska or whatever and they can't serve, Frost can take care of it. And of course, there's a separate fee schedule for serving as executor. But it starts at 3% on the first $1 million, and then 2.5% on the second, and then it goes down after that to 1.5% over everything over $2 million. So it's a lot of work to serve as an executor, as you well know, Todd. But we're very efficient at it, and we help prevent turmoil within the family.
Yeah.
So we interpret the document, we file the tax returns, we sell all the assets that need to be sold, transfer and distribute all the assets that need to be distributed. And we take care of any kind of tax issues that come with getting appraisals for 706, and we're just we've been doing it a long time. So it gives people, like I said, a great peace of mind, and it's a very rewarding area too. You learn so much about people after they passed. It's hard to explain, but I find it to be just a very fulfilling element of the job.
You mentioned executor and trustee serving as the quarterback for all those situations. Would the bank ever serve as co-executor or co-trustee with an individual family member?
We sure do, and our fee does not go down for that. As you know, Todd, when you have a co-executor or co-trustee, it tends to be more work because it means 2 signatures on everything, more correspondences, getting on the same page with that person. I will tell you, if it's a low-value estate and we're co-executor or co-trustee, it's not always a great business decision for the bank. But if it's a large relationship, or if they've been a customer for a long time and they're relying on us to help their, say, surviving spouse or child who's not sophisticated, we will absolutely help them. But every bank will tell you it's not their favorite thing to do is serve as a co-fiduciary. Yeah. But we absolutely do it. Absolutely.
Okay. There's some other roles that are defined in statute now, like special or independent trustee. So, say you have a beneficiary that's a trustee, and they have some economic downturn or business setback, and they need to have another trustee appointed to protect their trust. Would the bank serve in that type of role?
We do. Independent special trustees come with some issues because of prior acts and also tax returns. Sometimes you're carving out assets and you're saying, I can handle the house, but I need the bank to deal with the investments. Okay. So the question becomes, well, okay, if that house or whatever other assets weren't carved out are creating income, who's going to report that? Who's ultimately going to sign the tax return, because we're all operating on the same EIN, but we help with that and clarify all that. So special trustees are kind of, like you said, it's a newer area. I think it's a great expansion because it's a needed area that hasn't existed really much, but we're seeing it more and more because people are just saying, well, look, I don't, or in a settlement agreement. That's where you often see it too, is where families are fighting and they're saying, well, let's just appoint a special trustee to deal with these assets. and then we'll distribute the rest per the family settlement agreement. We can't agree on these, so we'll keep it in trust and have Frost take care of it.
Okay, that's a good point. Well, we have to take another break. When we come back, we'll talk about some specific family situations, people situations that a trust is beneficial, and how the bank serves as trustees there. Stay tuned. We'll be right back. Welcome back to Talk Law Radio. I'm Todd Marquardt here with Stephen Countryman from Frost Bank Trust Department. We've been talking about trustees and trust assets, and now we're going to talk about some different kinds of trusts. What's one type of trust that Frost Bank is good at taking care of?
Well, one that I particularly enjoy working on with families are special needs trusts. A lot of folks come into the bank and they've had a lot of sleepless nights because their child is getting older and they're getting older, and they either don't have any other children or family members to help take care of them, or the ones that the other children they have don't live nearby and can't. And so they're looking for a solution to that. And they'll come to Frost and say, well, can you help us with this? Can you take care of our child who's got special needs? And the answer is yes, we do. We're very good at it. We have an administrator, Ellen Parsons, who specializes in that area. She goes to all the CLEs. She keeps up to date because, of course, the goal of a special needs trust is to keep them qualified for government benefits and not disqualify them, but also support them in ways that will keep their life basically the way that it was while their parents were alive. People are worried when you have a child with, MHMR, something that is going to make it to where they can't be, in society and working and taking care of themselves, driving. But that worry can go away because, so long as there's sufficient finances to support them in a trust, Frost is really good at it. And we have all the connections in town to get medical teams and ascertain what their capacity is and what kind of day-to-day care they need, and how they can go and if they're on bowling teams, or if they're going to church and making sure all those things are facilitated. We do that, and it can get a little messy because of how the government can get involved and prohibit certain distributions or certain benefits, I should say. But that's our job, is to make sure that we don't ever get them disqualified from that. So I do enjoy meeting with those families because I think we often see quite a bit of relief when they know that there is somebody who's going to take care of their child. So those are great ones. And then the marital trusts are huge. I only say this kind of half joking, but we often call second marriages with children from a prior marriage, we just call it litigation. Something's going to come up, and it's not always the case, but it's not uncommon. And what to do with your estate. So what you often see is the husband leaving a trust, or either spouse, but the husband often dies.
Usually the husband dies first.
Right, exactly. And so they're leaving behind.
You know why? Because they have wives.
No comment. My wife's probably listening. So they leave behind assets in trust to benefit their spouse. And then when that spouse passes, the assets pass to their children. So it's a great formula,
Right. Take care of your spouse and then make sure that it doesn't get diverted somewhere else, that it ends up finally with your biological children.
Yeah, exactly. And it's a great idea. The concern that often arises is what happens if the wife is named, or the surviving spouse is named as trustee. Then you get some fighting. And there's legendary court cases going on at this moment that have been going on for decades about. But
you have to realize that the married couple really struggles with this. I have them. I imagine them in front of me right now, just watching the wheels turning as I'm saying. Spouse can be trustee, or you can name a bank, and here's some of the reasons why you would want to do that. The surviving spouse, or the other spouse they're imagining that they're going to be the surviving spouse, is is scared to death that for some reason they're not going to have access to the funds.
Yeah, exactly. I think the bank is maybe best worst option is not the way to phrase it, but if the other two options are either name the wife or name a child, then a bank is a great option because the bank is going to be unbiased.
Right.
And they're going to adhere to the terms of the document. They're going to look at what the wife's standard of living is and try to adhere to that as well. And principal distributions are going to be limited to what's only appropriate. Now, if the wife's in charge, she might think that a new house and a new car and maybe a car for a child from a prior marriage, something like that. Those sorts of things that could start litigation. That would be, kind of worst case scenario. Then on the other hand, if you name one of your children as trustee for the spouse, they have an interest in preserving the principal.
Right.
And so they're going to probably restrict distributions. That's just human nature. Not to say they absolutely surely would, but we see it all the time. So having a third party in there that's not biased, I think, is critical to those relationships. We have a lot of those marital trusts that we bank.
And that would likely keep the peace between the two of them. Because during life, the step-parent and the stepchild, they might have a good relationship. But after the death, the person that was the glue between those relationships can disappear, and then it's all about money.
Todd, that's it exactly. Unfortunately, that is the case. We see it so often, even with children that have grown up together. And when mom dies, that's the dam breaking, and all of a sudden the old wounds come back, and everybody's fighting over the soup spoon.
Right.
And having a bank in there to determine who's going to get what and to equalize things, it makes things. It's worth the fee, in my opinion.
I think so.
Yeah. Because
you don't want to destroy a family relationship just by leaving an inheritance to somebody. I think that if people are going to hate each other, they can all gang up on the bank.
Right, exactly. Yeah, we'll be the bad guy. And it is also, not impossible, but it's a lot harder to sue a bank. It's a lot more, not to say it's, again, not impossible, and it shouldn't be impossible. But for frivolous things,
right?
It's not going to be motivated by anger. It will be motivated by actual damages, which is right. And then I guess we could talk about, living trusts, which are a common technique that people use to deal with incapacity issues. Now in 2017, the legislature passed a law allowing power of attorneys to create rev trusts, which has been wonderful. We've been using that. Not a lot of banks have leaned into that, but Frost has. And but the old structure is the classic living trust, which, the person is the trustee for their life, but in the event of incapacity, the successor trustee is there to take care of them and take care of their assets, which, it used to be that you get, added protection for privacy and all these things and avoid probate, which is still true.
Yeah.
Maybe not quite as true as it used to be, but that incapacity protection is critical, especially for folks who don't have children or their children aren't nearby to take care of them. That's where those revocable living trusts are really beneficial. That's a huge part of our business.
Or even in the same situation where you have children that don't get along or that don't have a level of sophistication as the parent, that could become an opportunity for like a pre-death will contest where the family members are fighting each other for control, even if they don't get to have the money right away. Somehow the human psyche, it favors control.
Yep, that's right. We've just seen so many families fall apart at that end, and if Rost had been involved or if corporate fiduciary had been involved from the beginning, I think that there would have been they would have been able to salvage it. But unfortunately, once money's involved, there's just nothing that could stop some of the fighting that would occur. Unfortunately, so it's a nasty world, and I'll tell you, people are just not ready to serve or deal with probate if they're not in that world. I wish it was a class that was taught in high school right alongside home ec. It's like, well, this is the basics to serving as a executor or trustee. because 50% of us probably will at one point.
Yeah, well, plus I think that there's something that happens to a person when they lose a loved one. It's like getting hit in the head with a steel bar. You're just somewhat unconscious for a period of time until you recover.
That's an excellent point. Yeah, you need to get time to grieve. And oftentimes, if you're serving as executor, you don't have that. You need to
how do you
compartmentalize
manage royalties and real estate and stocks, bonds, and mutual funds that might be subject to volatility when you're partially unconscious due to the loss of a loved one?
That's exactly right. Yeah, and I think that's a huge benefit. There are folks who come in and name Frost Bank, and they have lawyer children. In fact, there's one that I'm thinking of now, incredibly big name lawyer in town, who is one of the smartest people I know, but the mother decided, well, let's just have Frost do it. He's too busy. He's too busy to do it.
Yeah. Well, I missed my opportunity to talk about sinners and saints, so we'll pick that up in just a minute. And then we'll talk about legacy next segment too, because you have a great story for that. But I also wanted just for you to talk briefly about how does the bank make a decision to make a distribution if it's based on discretion?
Great question. So we have an advisory committee, and when distributions over a certain amount are requested by a beneficiary, and you have to keep in mind most trusts have that health, education, maintenance, and support language that prohibits or restricts distributions. So what does maintenance and support mean? Well, it's pretty broad. So we use our committee, which has all this experience from dozens and dozens of years of working in the industry, and they will make that decision. And normally it's a conservative one.
Great. Well, we've been talking about what it's like to have a corporate trustee today with Stephen Countryman from Frost Bank. There's more. Stay tuned.
New to San Antonio? If you move from out of state, your estate plan may not be aligned with Texas laws. Did you know 41 states treat property ownership differently than Texas? Protect your assets and loved ones. As a newcomer to Texas, it's essential to review your estate plan with an experienced attorney. Marquardt Law Firm is here to help. Chat with us online at marquardtlawfirm.com to schedule a consultation. That's MARQUARDT lawfirm.com.
Welcome back to Talk Law Radio. I'm Todd Marquardt. On the radio, on podcasts, on Facebook Live, on YouTube, and on talklawradio.com. I'm here with Stephen Countryman from Frost Bank Trust Department today. And now it's time to talk about the sinners and saints. You know that song?
Oh, yeah.
So I talk about sinners and saints, somebody that's done something good and somebody that's done something bad. Today I just want to focus on Andrew Carnegie. I was thinking of a trust that established some benefit for society even after he's gone still today. Here's a quote. Carnegie believed in giving to the industrious and ambitious, not those who need everything done for them, but those who, being most anxious and able to help themselves, deserve and will be benefited by help from others. And so he built libraries while he was alive, and that continued. One of the things that I liked about his system, they call it the Carnegie Formula. It required financial commitments for the maintenance and operation from the town that received the library. So I thought that was really great how he would provide money for building the library, but then he required buy-in from the community.
Well, and that legacy lives on in charitable trusts and donor-advised funds to this day. I mean, there's so many great tax advantages for it. So, the ultra-high net worth families, the tax exemption is so high right now, but it's going down soon. And a great way to avoid paying tax is everything over the exemption amount goes to a foundation that maybe you established during life. And we have a couple of those. Actually, we have over $1 billion under management for charitable foundations and trusts and funds. And we have one that's a scholarship fund, over 300 applicants a year. There are certain requirements: have to be a Christian, have to be a Texas citizen, for lack of better terms, resident of Texas, and a few other things. And it's mostly oil and gas funded, but that money goes to support dozens of kids every year, and it's 4 years. So if they don't use all 4 years, they can use it for grad school as well.
Okay.
And then we have another woman who recently passed and named Frost as trustee to take care of her trust for forever, and it is growing. It also has oil and gas interests, and she was a very shrewd woman and incredibly intelligent and incredibly giving, and we're using that money to support causes throughout the city per her guidance. And she gave us what's called a precatory list of charities to support, and we try to support those charities and do, but we can also support charities that are like-minded and that have great records in the community. And and we work with so many charities. We give a lot ourselves from Frost. We tend to have good relationships with board members and everything else. So we know, who's on the up and up, who's doing good things for the city, and we're fortunate enough to be able to enable those charities through what she left behind.
Have you seen some lives benefited and changed?
Oh, absolutely. I mean, the kids are the big one, of course. Kids who've had financial difficulties, parental difficulties, being able to be supported by a charitable trust, for example, is wonderful. But also, for kids who may have had difficulty, we do a lot of court-created trusts for somebody who was killed. The parents were killed, and the court names Frost as the trustee to take care of the kid until they reach a certain age. And we're able to use that money to make sure that they go to school, become productive members of society, pay taxes, not just become these trust fund babies that you hear about that don't do anything with their lives. That is far from our goal at Frost. We want to make sure these kids are productive. That's kind of our core tenet, honestly, as a trustee, is not to make people, just sit at home waiting for the check to come in the mail. Yeah,
but there's a lot of thought that goes into making distributions. We talked about the HEM standard and the committee that does all that. But really, a trust could be written so that the distribution standard was, anything that's legal.
That's a great point, Todd. Yeah, I will. 90% of trusts have the HEM standard, but there are so many trusts that exist, 10% or more of our trusts that have unique provisions in there dealing with when to make distributions, when not to. Sometimes it's as simple as when they reach this age, you can buy a house for them. Sometimes it's if they can't pass a drug test, don't make any distributions. It gets very paternalistic, and we've seen it all, and we can manage it. But yes, trust can be. I mean, you hear stories about folks saying, "Well, if you become a nurse, you get this much. If you become a doctor, you get this much." I don't think we have any under management right now like that, but I wouldn't be surprised if one walked in the door and they started playing with ideas. Sometimes we have, very sophisticated attorneys, estate planning attorneys that are coming up with their own ideas either for their clients or for themselves and saying, I want to create a trust for my kids and I'm going to make it pretty extensive in terms of what the language says and what Frost is allowed to do in terms of making distributions. And we're fine with that because most of our administrators are attorneys or people who've been in the area in this arena of estate administration and trust administration for decades. They know how to read the document and they know when it's appropriate, when it's not appropriate to make distributions. And of course, again, the fallback is the committee.
Yeah. So we talked about taking care of somebody, a special needs child. We talked about taking care of a spouse, or even taking care of the trust creator himself in time of his incapacity. But trusts are also useful for dealing with beneficiaries who might be addicted to drugs or alcohol or gambling or just not good with money.
That's right. And oftentimes people create these spendthrift trusts for their kids that are also creditor protected. It's a great benefit for creating a testamentary trust for your kids. Rather than giving the money outright to them, you can give the money to them in trust. And if they're sophisticated or you want to wait till they get a certain age, then you can name them as their own trustee, and they still get that protection so long as they keep the assets in there. Also separate property protections, right, in the event of divorce.
Right.
So those are great benefits for a trust. Now, if they can't handle it for themselves, if they just aren't financially sophisticated, then it's a great option to have a corporate fiduciary in there to make those decisions for them and make life easy. But yeah, I'm a big fan of, rather than giving money outright to anybody, even if they're fully trustworthy and they're great with finances, still put it in trust. Just name them the trustee of their own trust.
Right, because we've seen with the economy, the new normal now is that we don't know what's going to happen with the economy. I mean, through no fault of our own, we can be forced to stay home, to stop working, to or to have institutions stop working. So you want to have your inheritance protected from those types of setbacks.
That's right. And with the exemption amount coming down, it's very high, 13.6, whatever it is. But we expect it to go down here at the end of 2025.
Right, because Congress and the president would have to agree to extend that, and we haven't seen the Congress agree to do much.
No, they're good at doing nothing. And I will tell you, it's a low-hanging fruit. When you have, 30-plus trillion in national debt, and taxing dead people is a pretty low-hanging fruit for being able to start to recoup some of that. And, whoever wins, the expectation is that could change. Obviously, one party is probably more in favor of changing it than, or I should say letting the sundown provision occur. But either way, we need to be prepared. And for larger estates, visiting with your attorney to figure out how to avoid having to pay tax at your death, it's a smart move right now because we expect some changes here in the next year.
We want to talk about legacy because Marquardt Law Firm sponsors the show, and we focus on business and estate law, including last wills and living trusts. Can you talk about what your legacy might be, or something a legacy that you've inherited from those who have gone before you?
Well, so my legacy at Frost is I hope that I can just continue to inhibit this. To grow, not inhibit, but grow this amazing goodwill that Frost has developed in the community. I'm hoping that's my legacy is to just expand on this amazing company. It's not often that people get, romantic about a company. Not to say that that's how I feel, but it's been extremely supportive of me and my career, my family, and it's an institution here in town. So I hopefully that will be part of my legacy. Will be growing the bank and being a part of the community.
And then you could see all the new good things happening from new charitable trusts or new endowments new family foundations being grown. That's
right. We're doing a lot, and it tends to be the private investor, the individual, the charitable minded person that does a lot for the community, does the most for the community, and we tend to be the arbiters for that. And so I'm. It's a tough question thinking about legacy. I don't think about it as much as I probably should, and I wish I could give you a better answer about myself. I hope I do the same for this community. I'm a San Antonio native. My mother's family's been here since the Alamo.
Wow.
And I hope that I will be part of growing this community and making it a better place for my kids. And I think that's my hope for my legacy.
Good, great. Well, finding people that want to contribute back to society, to give back, to help the community, their state, their nation, and the world is hard to find. And so I ask everybody, who else do you want to give to? Do you want to give to charity? And, the people that say, what do I care? I'll be dead. Well, they're just not as fun for me to work with.
Yeah.
I love working through all those ideas of what could we do?
Well, there are some great charities in town, and I would love to plug Magdalena House and of course, Wounded Warriors, and we do a lot of work with the Area Foundation, and of course the Area Foundation supports a lot of different causes itself. So there are a lot of really great charities in town, and I'm sure your listeners are charitable minded as well. And of course we've got, my brother's on the board for Magdalena House. Full disclosure, but we've been involved. My family and him and his wife have been involved with it since for over a decade, and it serves for women who are at risk, been trafficked, that sort of thing, and they've just been growing and doing so many great things. So anyway, I don't mean to make it all about that.
No, I think it's great. That's part of your family's legacy. That's exactly what I was looking for. Thank you for sharing that.
Of course, yeah.
So we've had a great show. Thank you for joining me. Hopefully we can do this again and dive deeper in some of these issues. Enjoyed talking about trusts and informing the audience about all the different kinds of assets and people that you help. So I appreciate you joining me today.
Thanks, Todd. I feel like there is still a lot to talk about, so I'd love to come back.
Great. So that's it for today. I'm Todd Marquardt. I'll talk to you later.